so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the days of overbidding, waiving inspections, going over appraisal value, closing in 2 weeks, fake cash offers are over in almost every single metro area across the nation. Sellers have ran out of time as far as getting the best deal for their homes, and now we're starting to see all of the data point to signs that the housing market is shifting back into a buyer's market, which is desperately needed if you're like me on the sidelines. But regardless, for the economy, for America, we need a balanced housing market, and we will get that this year. Now, today, what we're going to do is I'm going to pull up an article that I covered half of already from Redfin, titled Redfin Economist Q&A: How Rising Rates and Economic Uncertainty Could Impact Home Prices, Migration, Rentals, and More. Now, here's the thing, you guys. I covered only some of these questions in one of my last videos, so I'm going to cover the rest right now in this video. And essentially, Redfin is asking several economists their opinions about certain very important questions. So I'm going to take a look at that. We're going to look at the question asked, and then we're going to look at their answer. And then if you guys can, comment below and let me know if you agree with their answers. The last answers we reviewed, in my eyes, were absolute garbage. Economists don't know what they're talking about. Or at least it seems that way, which is really, really crazy. And if you guys please can, like this video for all of the efforts that I'm doing. Subscribe if you haven't already. And as always, comment and know that I appreciate all of your insights and all of your comments. But let's get started on this article right now. All right, first question is, if/when the Fed raises interest rates again, will mortgage rates go up? This is a really important question. Let's read this. The Federal Reserve initiated the biggest interest rate hike in nearly 3 decades last month in an effort to dampen consumer demand and combat inflation. So here's the first answer from Taylor Marr. A lot of factors have come together to push mortgage rates to their highest level in 13 years and dampen home sales. High inflation expectations and the Fed tapering their purchasing of mortgage-backed securities both contributed to the interest rates hikes, which have in turn pushed up mortgage rates. The bright spot for home buyers is that the spike in mortgage rates has already happened. The current 6% mortgage rates already have future interest rate expectations baked in. I expect interest rates to remain high and the housing market to remain relatively quiet for the next few months. And here's the second economy. The consensus in the economic community is that the Fed will rise interest rates again in July by 50 to 75 basis points, followed by 3 similar hikes later this year. As long as those expectations remain unchanged, mortgage rates will probably hold steady. But if inflation remains high or another economic factor causes the Fed to respond aggressively, the Fed could increase rates more than expected and mortgage rates could rise again. You guys, if inflation remains high, we haven't even seen the peak. We're in 40-year high inflation. How are interest rates not going to go up? So essentially what they're saying is when the Federal Reserve meets in July this month, when they raise rates 75 basis points, and then when they meet again in September and raise rates probably 75 basis points, they're saying that's not going to have any effect on mortgage interest rates because it's already priced in. What I'm saying is, that's wrong, because the Federal Reserve is going to take additional measures other than raising the federal funds rate. They can also do many other things like sell mortgage-backed securities. So in my mind, interest rates are going to go up, probably touch close to 7% before the end of the year. But I want to know what you guys think. Comment below if you agree with these economists or not. Let's get started back onto this article right now. How will interest rates and/or a recession impact new construction? I like that question. Let's read this little bullet point first. The pandemic-driven buying boom intensified an existing housing shortage, drove up home prices, and put a spotlight on the need for more newly constructed homes. As of the first quarter, there were promising signs that home buyers were making progress adding new supply after years of shortfall, with building permits up, especially in Sun Belt hotspot? So this is a great question because, the obvious answer is yes, a recession is going to negatively impact new construction, the starts, and the sales. But let's see what he has to say. New construction or for sale homes is often the first sector to take a hit from rising rates and economic cool down, so construction will continue to slow. Some projects that are already in progress may be converted from a for sale properties to rentals. One bright spot for builders is that the cost of lumber, which has rose sharply during the pandemic, has actually started to decrease. Lumber prices are way down from the pandemic peak, but still other material costs are still rising and builder sentiment is down. Now, you guys remember what I have been saying. I'm now going to start focusing primarily on new builds when I go to purchase homes because I believe those new builders are going to be the greatest at risk of financial hardship, right? So I believe they're going to start dumping inventory, they're going to start doing fire sales and offering outrageous buyers incentives, and that's why my eyes are going to be for the most part on the new builds. I'm going to obviously look at resales and possibly some flips, but my main thing is I need a primary residence. That's where I'm going to start. But I also find it's interesting. So, a survival mechanism from some of these new builders, instead of doing fire sales, they turn the homes into rentals. Isn't that crazy? So, a lot of these homes might actually be turned into rentals from the builders or from institutional investors. Kind of scary if you think about it. But let's finish out this article right now. All right, guys. So, here's a super important question. What's your advice for sellers who regret not selling sooner because they could have earned more on their home in February and March? So essentially, this is acknowledging that we're past the peak. Now, here's my advice for sellers without even going into this is it's still a great time to sell, right? You're just not going to get away with murder. But if you want to sell, sell. The question is, what will you do after you sell? If you can answer that, and if you have a plan in place, it might be a good idea to sell your house, right? Only you know that. But let's see what they have to say right now. If you're thinking of selling your home, it's less risky to do it now than wait until next year. I advise pricing slightly below comparable homes in your neighborhood to get buyers' attention. This is the first time Redfin has essentially said price your home below market value to sell it. Is that not the writing on the wall that we're entering into a buyer's market? Y'all see this? Y'all read this with me? No, I understand some metro areas are way behind, but nevertheless, this is actually happening. Let's continue. I can't tell you exactly what's going to happen in the future, but I can tell you that prices are still high right now, even if there's a little lower than they were a few months ago. A year from now, we may be in a recession and prices may be lower, or right now we're in recession. Why do they keep saying a year from now? Why do they keep saying that? I hate it so much, you guys. These are smart people with degrees, economists, right? Why are they saying that? Let's continue. Be realistic. A lot of home sellers are dropping asking prices because they're pricing too high. That's mostly because their expectations are unrealistic. Maybe they're basing prices off one-off information, like a neighbor's home selling for 100,000 over list price a few months ago. You should be making decisions based on data, which will tell you we're past the days of getting 30 offers and selling for six figures above list price. So y'all, let me know what you think about that. But what I really honed in is that he's suggesting sellers will now need to start listing their homes for under market value. And again, you guys, once the recession is confirmed, that fear of missing out is going to spread onto the sellers. They're going to start freaking out. They're going to start lowering their prices on homes. And that is our opportunity to go in and purchase our primary residence. And after you purchase a primary residence, by all means, buy one rental, maybe two rentals. I'm not talking like hundreds of homes, but maybe one or two rentals, right? If you're prepared to do so. I don't think there's anything wrong with that. And personally, I want you guys to know, I think real estate is an incredible investment. However, there are rare occasions where it's dangerous to purchase. And what I'm saying is right now, even though things are changing rapidly, it is still dangerous to purchase real estate. Now, as always, you guys, I really appreciate you watching this video. And if you're out there investing in real estate, I do wish you luck and I hope you win.